Hey folks, I hope you're doing fine. I'm Simo from Investment Research, and today is November 11th, 2025, and I need to talk about what's happening with Tesla right now because the stock is exploding higher on fresh robotaxi buzz and a resilient EV market. From what I've been tracking in my notebook here, Tesla is trading at $445.23 midday, gaining 3.66% from yesterday's close of $429.65 after dipping to lows of $433.36 early in the session. You know, when I look at that kind of price action, a 3.7% intraday swing from low to high, that tells me momentum is building fast. So let me walk you through my complete analysis of where Tesla stands today, what's driving this surge, and whether this stock makes sense at current levels around $445, what I'm seeing in today's price action. Alright, so the first thing I need to address is the impressive rebound we've been witnessing. From my research into today's trading, Tesla opened flat but powered through resistance, gaining 3.66% from $429.65 to $445.23 so far. During the session, the stock fluctuated 3.70% from that day low at $433.36 to a day high of $449.67. Now, according to what I've been studying in my technical analysis, this kind of volatility is par for the course for Tesla, with its beta of 1.61. But what's interesting from my view is that volume is spiking to 76 million shares already, well above the average of 65 million, fueling the upside. You know, in my experience analyzing stocks, when volume surges on rising prices, that confirms conviction and can signal the start of a bigger move. But here's what I've noted in my analysis that's important. The stock is firmly in the upper channel of a multi-month ascending triangle in the short term. From what I've been watching, Tesla has risen in 7 of the last 10 days, up 10.11% year to date, and a whopping 43.58% over the past year. Moreover, according to my calculations, the price has gained 3.66% so far today, which suggests buyers are piling in ahead of key catalysts. The technical setup I'm tracking. Now, let me walk you through what I'm seeing from a technical perspective because this is crucial for understanding where the stock might go next. From my research into the chart patterns, several analysts on TradingView are highlighting a Tesla breakout ascending triangle targets $500 plus setup. The current price around $445 according to real-time data, with targets at T1 equals $475 and T2 equals $510. Stop levels are at S1 equals $430 and S2 equals $410. What I've been studying in my notebook is that Tesla bounced sharply off the EMA 50 at $420, confirming it as a rock-solid, dynamic support zone. Moreover, according to technical analysts, the stock is completing a classic ascending triangle pattern. You know, this is one of the strongest bullish continuation signals in technical analysis. From what I understand, Tesla consolidated sideways for months against the upper trend line near $450, building pressure before today's volume-backed breakout. According to my assessment, if this pattern plays out, we could see a push toward the all-time high territory above $480 and potentially $520 by year-end. However, I need to be honest about the technical warnings I'm seeing. A brief sell signal flashed from a pivot high on October 18, 2025, leading to a 5.49% pullback over 5 days, but that's now fully reversed. According to the technical analysis, any further downside is capped until the new bottom pivot at $410 forms. From what I've been watching, Tesla finds support from accumulated volume at $430, and this level may hold as a buying opportunity with an upwards reaction expected on tests, the fundamental business that everyone's missing. Now, what frustrates me when I look at the market's reaction to Tesla is that short-term traders are fixated on daily swings while overlooking the seismic shifts in AI, autonomy, and energy. Let me walk you through what I've been studying about the actual company performance, because this is what really matters for long-term investors. From my analysis of Q3 2025 results, Tesla delivered blowout numbers despite headwinds. The company reported record deliveries of 481,166 vehicles, up 9% year over year, fueled by a rush for the expiring $7,500 EV tax credit. What I've noted in my research is that automotive revenue hit $21.2 billion, up 6% year over year, while total revenue soared to $28.1 billion, a 7.17% beat on estimates. Moreover, free cash flow exploded to a record $4 billion, up from $146 million in Q2, showcasing the power of Tesla's capital efficiency. Adjusted EPS landed at 50 cents, a slight miss on 44 cents consensus, but still marking the third straight quarter of profitability growth. The financial metrics I've been crunching show net income at $1.77 billion for Q3, with trailing 12-month revenue at $95.63 billion and net income of $5.08 billion. According to my years doing equity research, when you see FCF triple in a quarter amid scaling AI investments, that screams undervalued growth machine. What really caught my attention from my analysis is the diversification push. Energy generation and storage revenue jumped 50% year over year to over $3 billion, now 10% of total revenue, driven by megapack demand. From what I've been studying, this shift toward high-margin energy and autonomy is Tesla's secret weapon, reducing reliance on EVs as competition heats up. Moreover, operating expenses rose 50% to $3.43 billion on R&D for Optimus and Robotaxis, but margins held at 5.8%, a dip from 10.8% last year, yet poised for expansion as scale kicks in. The Musk pay package and shareholder confidence. Now, let me talk about something that's been dominating headlines in my research. On November 6, 2025, Tesla shareholders overwhelmingly approved Elon Musk's massive 2025 pay package, up to 400 million shares tied to decade-long performance goals, potentially worth $1 trillion if hit. From what I've been reading, this vote, 75% in favor, signals ironclad confidence in Musk's vision, despite the stock dipping 4% post-vote on profit-taking. That's a 3x potential windfall from current levels, underscoring bets on Tesla dominating AI and autonomy. According to analyst Daniel Ives' assessment, the joyride has just begun for Tesla stock, highlighting robo-taxi testing ramping to 1,500 vehicles by year-end, 1,000 in California, 500 in Austin. Now, from my research into the thesis, key drivers include Optimus humanoid production starting late 2025 and energy storage growing 100% year over year. Moreover, according to what I've been studying, Tesla's positioned for Trump-era deregulation on AVS, where it's the only player with real-world miles at scale. From my view, while the package sounds outsized, what I've noted is Tesla's goal to hit $297 billion revenue by 2030 at 25% CAGR. According to my calculations, if autonomy contributes 20% of revenue by 2027, the math justifies 500 plus shares, with EPS projected to climb from $2.85 in 2025 to $11.61 in 2030. Earnings power could support even higher multiples. So, what Wall Street analysts are saying. Now let me walk you through the latest analyst activity, because this gives us insight into how institutional investors are viewing the stock. From what I've been tracking, firms are split, but tilting bullish post Q3. According to my notes, Morgan Stanley's Adam Jonas reiterated buy with a $500 target, citing energy growth. Wedbush's Dan Ives hiked to $600 from $550 buy. Wells Fargo cut to $120, but that's an outlier on China fears. Overall, 20 buys versus 10 sells, average target $392, implying 12% downside, but high end at $600 screams 35% upside. You know, when I see bulls like Ives calling it a joyride, that tells me the street's warming up. However, I need to be transparent about the mixed signals. According to what I've been reading from tip ranks, bears like Wells Fargo flag October China sales down 9.9% to 61,497 units. Moreover, headlines from November 7th show Tesla stock falls after Musk pay vote and Cybertruck chief exits amid sales slump. From my assessment, this tells me the analyst community is divided, with bulls eyeing autonomy upside and bears fretting EV demand and margins. The Cathie Wood trading activity. Something interesting I've been tracking is Cathie Wood's ARK Invest moves. According to reporting from November 10th, ARK trimmed Tesla shares amid the post-vote dip, but remains a top holding at 10% of assets. From what I understand, Wood sold on strength after Q3, but bought dips in October. You know, when a high-profile bull like Cathie Wood holds steady through volatility, that can anchor sentiment as momentum traders rotate. However, from my view, this is tactical rebalancing after a 43% YTD run, not a vote against the thesis, valuation analysis and price targets. Now let me walk you through my valuation work, because this is where we determine if Tesla is actually undervalued or overvalued at current levels around $445. From my calculations, Tesla trades at a market cap of $1.48 trillion with trailing 12-month revenue of $95.63 billion. That puts the price to sales ratio at about 15.5 times. You know, for a company guiding 25% CAGR to $297 billion by 2030 with AI tailwinds, that's premium but justified in my view. According to various forecasting models I've been studying, the projections vary wildly. CoinCodex sees TSLA between 380 and 520 in late 2025, while aggressive models from ARK peg $2,000 by 2027 on Robotaxi. From my research, the predicted fair opening price today was $435, but it gapped to $440 on volume. You know, what I've noted from all these models is huge dispersion, reflecting bets on execution. What I've concluded from my own modeling is that a fair value range for Tesla over the next 12 months is $480 to $550 based on 20 to 25% revenue growth, margin rebound to 12% operating, and a 12 to 15 times forward sales multiple. Moreover, according to my risk-adjusted calculations, the base case target is $510, which represents roughly 14% upside from today's $445.23. The key risks I'm monitoring. Now, I need to be completely honest about the risks because no stock is without them. From my risk analysis, here's what concerns me. First, today's 3.7% range highlights ongoing volatility with PE at 303x shaking out speculators. According to my assessment, this could create 10 to 15% drawdowns on misses. Second, China sales weakness, down 9.9% in October, signals demand cracks amid competition. Third, the post-tax credit Q4 delivery drop could pressure Q4 EPS. From a fundamental standpoint, what I've been watching is execution on autonomy. Delays in robotaxi scaling could erode hype. Traditional autos like BYD are gaining share, and rising OPEX on AI eats margins. Credit risk is low given Tesla's $33 billion cash pile, but regulatory hurdles under any admin remain. My investment thesis and recommendation. Alright, so let me bring everything together into my investment thesis based on all the research I've done. From my analysis, Tesla is the undisputed EV and AI leader, with Q3 proving resilience via record FCF and deliveries. The autonomy pivot, Robotaxis Optimus, creates trillion-dollar optionality while energy diversification de-risks the model. Management's beating on FCF and scaling production builds unshakable credibility. Moreover, according to what I've been studying, catalysts abound. Robotaxi event, December 2025. Optimus production late year. Q4 earnings, January 28, 2026. And potential AV deregulation. 95% brand awareness globally leaves room for 20% market share grab. From my valuation work, the stock trades at 15.5 times sales with 25% growth and AI upside. According to my calculations, that's a bargain for the disruption profile. The technicals scream breakout to $475 plus if $430 holds. You know, in my view, the risk reward at $445 is skewed bullish for 1 to 3 year horizons. So here's my official recommendation. I rate Tesla a buy with a 12-month price target of $510, representing 14% upside from today's $445.23. For existing shareholders, hold tight and add on dips to $420. For new investors, current levels are a solid entry, but scale in given volatility. Moreover, according to my risk framework, avoid chasing above $460 without a pullback. The key catalysts I'm monitoring include today's close to confirm the breakout, December Robotaxi unveil, China sales rebound in November data, Q4 deliveries December 31st, and earnings January 28th, 2026. You know, from what I've been watching, Tesla's at an inflection where autonomy hype meets execution or falters on demand. Alright folks, that's my complete analysis on Tesla as of November 11th, 2025. From everything I've studied, from all the numbers I've crunched, from all the technical and fundamental work I've done, in my view, this company's firing on all cylinders and the stock's primed for the next leg up. The volatility will test nerves, but the trajectory is electric. As always, do your own research, know your tolerance, and invest long term. Thanks for watching, and I'll see you in the next analysis. Hey, hello!